cement production and imports of capital goods. Capacity utilization in the manufacturing sector continues to remain above the long period average. Investments in fixed assets by listed private sector manufacturing companies also registered healthy growth in the first half of 23-24, primarily driven by key industries such as petroleum, steel, chemicals and cement. The total flow of resources to the commercial sector from banks and other sources at rupees 17.6 lakh crore during the current financial year so far is significantly higher than that of last year, which was at rupees 14.5 lakh crore. Despite weaknesses in external demand, both goods and services exports returned to positive territory during the month of October this year. Looking ahead, private consumption should gain support from gradual improvement in rural demand, strengthening of manufacturing activity, and continued buoyancy in services. The healthy twin balance sheets of banks and corporates, high capacity utilization, continuing business optimism and government's thrust on infrastructure spending should propel private sector capex. The drag from external demand is also expected to moderate with a turnaround in merchandise and services exports. The protracted geopolitical turmoil, volatility in global financial markets, and growing geoeconomic fragmentations, however, pose risks to the outlook. Now, taking all these factors into consideration, real GDP growth for the current year, that is 2023-24, is projected at 7%. I repeat, real GDP growth is projected at 7% for the current year, with the third quarter at 6.5% and the fourth quarter at 6%. Real GDP growth for next year, and we have provided the figures for the first three quarters of next year. So real GDP growth for the first quarter of 24-25 is projected at 6.7%, for Q2 at 6.5%, and Q3 at 6.4%. The risks are evenly balanced. I would now like to turn to inflation. Food inflation, which was in double digits in July, has since then moderated to 6.2% in October, with correction in vegetable prices. Fuel inflation slipped into deflation since September, primarily reflecting the sharp fall in LPG prices in end August. The disinflation in core gathered momentum during September-October and reached levels last seen in the fourth quarter of 2019-20 due to the combined effect of policy rate increases and reduction in cost push pressures across core goods and services. Going ahead, inflation outlook would be considerably influenced by uncertain food prices. High-frequency food price indicators point to an increase in prices of key vegetables, which may push CPI inflation higher in the near term. The ongoing Rabi sowing progress for key crops like wheat, spices and pulses needs to be closely monitored. Elevated global sugar prices is also a matter of concern. On the positive side, global commodity prices, particularly agricultural commodities, have softened except rice. For highly import-dependent food items like edible oils, international prices continue to remain soft. Domestic milk prices have stabilized. Proactive supply-side interventions by the government are also containing domestic food price pressures. Crude oil has softened considerably, though it may remain volatile. Taking into account these factors and on the assumption of normal monsoons, CPI inflation is projected at 5.4% 6% for the current year, that is 2023-24, with the third quarter at 5.6% and the fourth quarter.
Well, this was RBI Governor Shaktikanta Das there, who's said that RBI has kept the repo rate unchanged at 6.5%. He's also said that the real GDP growth for the year 23-24 has been projected at 7%. The inflation, he said, while it was double digits in July, it is now down to 6.2%, and the fuel inflation has also slipped into deflation. Big statement there by the RBI governor. He's also said that uncertain food prices might affect the inflation outlook, and the elevated global sugar prices are a big concern for the country, while the domestic milk prices have also stabilized. Now, this was a breakdown of what the RBI governor has been stating. The major takeaway, of course, is that the repo rate remains unchanged and the real GDP growth for this year has been projected at 7%.